All right, ladies and gentlemen, I hope you had a wonderful weekend. Last week was absolutely insane. The S&P hit all-time highs. The market ignored rate cut odds going down as earnings started to take over. And this week, it looks like we are about to get even double that as you have more earnings, more data, and we are getting closer to Powell. So, Chad, we got a lot to go over. I have the breakdown. We're going to talk everything from earnings to events in politics. We're going to talk about a little bit more on what is leading this year and where we're going to go from here because, like I told you, it is an all-time high. The stock market has never been this high. The last time you were this high, it was around January of 2022, and then everything changed as policy and Powell started to raise rates. So we're going to go over all of that. I even have a couple of option trades related to earnings, so I hope you're ready for that. But what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but still get a spread. Started with a live, but it's still reinvested. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, it's Monday. I keep forgetting to do this. I think it's a good time at the start of week number 4, but this is the random account generator. It is now dropped to $1,000. We started this one with $500. It's still up, but now there is barely any more plays, and what I need from you is to post a random option trade in the comments below. Keep it below $100, and we are going to do a random comment picker tomorrow and pick that play and see where it takes us. But, Chad, let's go. We need a W there, but to start off with this week and what we're going to deal with, you have a huge list of earnings. You're going to be getting Netflix, Tesla, Intel, American Express, J&J, Procter & Gamble, GE, RTX, 3M, IBM, and T-Mobile. And these are some of the big ones, and why I'm bringing them up because everybody is still kind of looking at that consumer element, and they want to know, is the economy doing good? If you are not familiar with what happened last week, SMCI and the chip makers, whether it was upgrades from AMD all the way down to TSM beating, and then SMCI coming in and saying that they're raising their guidance unexpectedly, this had the market really optimistic, and people were looking at this as like a broader sense of the economy, even though some of the other broader economic data wasn't showing much. So keep that in mind for this week because these earnings, they outweighed all of the rate cut odds last week, and it got people moving. So taking a look at the calendar, you have a lot more than just those names that I put on. We are really going to get a full week of earnings. There's a lot of names I didn't mention, like Halliburton or even LMT, even DR Horton and the Builders, Lam Research. You're even going to get ASML. There's a bunch of names, Visa, the whole week, every single day, up until Friday, we are going to be getting a lot of earnings. So watch if that effect keeps continuing. And something that we brought up leading into all of this, if you haven't noticed, a lot of companies are beating because in the last month where we kind of chopped around, a lot of analysts lowered their targets. And even though we're expecting overall growth, a lot of companies have had the bar lowered coming into all of this. So we'll see how it all plays out, but that is going to be your first big theme of the week. The second big thing now, you got some big data on the way. We're going to be getting GDP numbers, and if you don't remember over the last quarter, everybody from the Fed people all the way down to all of the analysts, they've been talking about 4% GDP, 4.8. It's really big. Goolsby, he keeps talking about it as well. Well, this time around, we are expected to get a more lowered number. It's supposed to be at 1.8. Depending on this number, whether it's hotter or lower, this actually might be the most important data of the week. Now, let's say it comes in status quo. Let's say everybody else is just focusing on earnings. You are still going to have a couple of things to focus on, and the second one is going to be PCE at the end of the week. That's the Fed's preferred inflation gauge. It will give us another sign of inflation. We'll see if that's too hot or too weak, and then the PMIs. Remember last year, S&P Global PMIs, they had the ability to move the bonds a lot, and if you didn't see what happened last week, even though the market went up, the bonds got absolutely destroyed. If you go and look at one of the 10-year charts, charts, you'll see it now. And I hope all of this is familiar, especially if you've been watching, baby. Thank you, because you definitely know what I'm talking about here. You're back up to like 4.15. Remember that whole 425 to 45 and then 425 to 40. All of this is kind of signaling how people are feeling. And once again, even though the market made a move, Russell is still down, rate cut odds chilled out. You'll notice the 10-year is now getting back up, creeping up to that 4.25. People still like things when the 10-year is below 4.25, but if it does get above there, that may start changing some of the optimism that we have seen as of late with the bonds. So keep all of that in mind, but that's some more of your big data. Then finally, you will be getting a China rate decision. There's been a lot of rumors and a lot of back and forth. China did absolutely terrible last week, and then randomly on Friday with the run-up, they started going crazy. So keep your eyes out for it. I'm sure we're going to be getting a lot of data, but a lot of people are saying ABC, and it relates to even the Bank of Japan because they are also going to be on the 23rd on Tuesday. This was supposed to be big, but as of late, China's been getting clapped. Japan's inflation has been going low. They even had that tsunami and earthquake thing going on. People were not as optimistic about a policy shift as they were just about a month and a half ago. But the thing between China and Bank of Japan right now, if you want to understand something on a global scale, what is going on is that Japan stocks are absolutely ripping while the Japanese yen is depreciating. That should make sense. You may have heard this. Even places like Argentina, the currency weakens, their stock market rockets up. That is what you're getting in Japan, but there is also a gigantic gap between the performance in Japan and then the performance in China. So I'll give you a chart here so you could take a look at it, but what it is showing you is that there is a new theme going on, and it's called ABC, and this is why Japan could be benefiting off of it, but people are saying the market is turning into ABC, and that means anywhere but China. You know these cute little names like Tina and all of those things? Well, now there's ABC, anywhere but China, and that's kind of getting reflected here. So that's why China, Japan, how they perform, if they make any changes, this will be another big element that we're going to see throughout the week. And then finally, politics, baby. Remember what happened last week or 2 weeks ago? It was Iowa, and that did have a little baby effect on the dollar. Some people were blaming the strong dollar on Trump odds going up, but here's the deal. The New Hampshire primaries, it is a very big event, or at least it's very big for the media. You could go read up on the history of this. It really wasn't until like 1968 or 1972. There were some election reforms, and then it became a huge media event. But why it's so important here on a political end, the one thing I want you to see is look at the dollar. That's all I really care about, especially with the dollar being the top performing asset of 2024. It is already up 2.1. We want to see, is there an upset victory? Does an underdog win, whether it's Republican or Democrat? We already know it's going to be Biden, but a weak showing here can change the course of the primaries, as we saw in 1952, 1968, 2008, and 1980, depending on the political party. So all of that is going to be this week. I already told you, you got the earnings. The market's already doing its thing. We'll see where it takes us. We'll see how the market balance this is out with all of the rate cut stuff. But now, moving into your next key, I think this is very important. The S&P 500 is at a 52-week high, and the dollar is the strongest asset so far of this year. So we've already touched on that and what I'm about to even tell you here, but I want you to understand what really went down last week. The rate cut odds took a back seat, and the earnings and hype earnings out of technology, that's what really got people going. Remember what I told you guys last week? I already showed you the 10-year bond and all of that stuff. It's very simple. If the rates start going higher, maybe the 10-year starts going to 4.25, is everything going to vomit? No, but if they have a bad earnings, they probably will. If they have a good earnings, people are going to try to hide there as a safe haven while the rates start moving, and they're going to rely on good earnings to pretty much give them a pass for the next couple of months, or at least until the next earnings or a big policy shift by Powell. So why I'm bringing this all up, you have to understand. We kept talking about rate cut odds. You started watching the market get bearish. Rate cut odds started going down. March odds last week, it was 80% chance of a rate cut at the end of last Friday. Now at this Friday, the end of this last Friday here, I guess it was 2 Fridays ago for the other one, you're now looking at no rate cut happening as the most probable outcome. Still, granted, it is below 60%. We still got 2 weeks in earnings. That could change, but you even go down to December, the rate cut odds definitely started to pull back even on the short end to the long end, and this is why I'm saying it's kind of fascinating, because in the middle of that and you thinking the market would be bearish, yeah, banks went down and the Russell went down, but we hit a new 52-week high, and that's because the earnings got everybody distracting this, and while we were kind of selling off from rate cut optimism cooling down, people started buying up on earnings optimism going up. Remember, if you could get growth going up, inflation coming down, that really is going to be your soft landing. Nobody could say it's happened yet, but everybody is getting jumpy on all of the signals. So keep that in mind. It's going to be a huge sort of emphasis we're going to see this week, I'm sure. And then finally, as far as the highs and where we go from here, the party could stop at any moment. You know, you have rate volatility, bonds, Fed futures, and then any sort of the data that comes out this week domestically or abroad. It could make us stop out of nowhere, or maybe we just start getting bad earnings, but at the same time, it is very hard to say how high we are going to go. If you were there on Friday, right when we got past the previous high, it was like 480, I think, or like 481, it was very hard to say where it was going to stop, and we did have a good call out on a point of resistance, but it was all based off of the futures now. So anywhere from here, blue sky breakout, no man's land, whatever you want to call it, but as far as like support and resistance, how high things go, it's easy to know if we start going low what the next levels of support will be, but for the high side, we don't know, and we got to be looking at the Fed futures, or excuse me, the normal S&P futures to get an idea of where that's going to go. So hopefully that helps you throughout your trading this week, but all in all, it's going to be an exciting week. We got earnings kicking off. It gets even crazier after that. We'll see where it takes us with new highs. Shout out to the long term, but now let us get into the plays. So, right off the bat, I got 3 different plays for you. All of them are related to earnings. 2 of them are for this week, and 1 of them is not. But let's start with the first one, Intel. And I went early on this. Remember, we've been doing the earnings plays. If you did not watch this tutorial, how we turned $600 into $7,000, it has literally produced, I think, 2 more 1,000% gains, or 3 more, since we have made the video. You guys have been learning. I have been loving it, and it's been offering us an opportunity to get into cheap plays with a lot of upside, especially when the market is moving crazy like this. So I really hope you guys watch that video, because this is the strategy I keep doing. We did the 2 standard deviations, but lately I've been kind of wanting to go like the day before earnings. I figured, hey, there was a lot of chip hype on Friday with the whole SMCI thing. I said, let's go with the Intel. I put a little bit more amount of money, and if you watch the video, my problem with Intel that I do not like is that it's kind of a cheap stock for how much you're spending. I think I spent about like $100 and change both ways. That's pretty expensive because it's a $40 stock. Now, granted, some of those hit like the Delta ones, but you also see they move much slower than hitting something when there is a bigger dollar amount. So keep that in mind, but I decided to go early on the Intels. At the time I did it, I think it was like right in the morning on Friday, so the odds moved around. I think the stock was up like only 1% or less, ended up moving 3 on Friday, but what I decided to go with, I grabbed 2 of the February 2nd, the next week calls, getting an extra week of time, $52 calls. I grabbed 2 of these at 45 cents. They went up 100%, a little bit more than they chilled out there by the close. And then I also went to the downside. These dropped. I bought them at 25 cents. I bought 4 for 25 cents. I spent about $1, so $90 on calls, $100 on the puts. And these are the 41 puts, but essentially at the time that I ran it, these were within 2 standard deviations. So that's why I liked it. If it moves as expected, we're not going to pay out. If there's a surprise up or downside to this earnings, then we should be able to get our money back, or hopefully get a good profit. But the fact of the matter is, all those I didn't even show you. I thought I had it up here. So here are the calls, $41 puts, and then where is the calls? Calls are right there. So they did very good. But all in all, you got to already see the breakdown of what I'm looking at. I will be keeping my eyes on the other chips, but a bad earnings will kill the company. Like I'm saying here, anybody right now with a little bit of rate volatility, if you do have a bad earnings, I do not think that's going to be favorable. So watch out for that. That is play number 1. Then play number 2. This one isn't earnings yet. It's going to be in like a week or so, but I wanted to do it with all the chip hype, but then I realized it wasn't like a full AI chip company, and the company I'm talking about is ON. I didn't like this play because it's more linked to EV than AI semiconductors, but for real, it has been a pretty big outperformer. They were doing pretty good, and then they started to slip up. That's where I'm like, okay, maybe it was their bad earnings. They did give very bad guidance, I think, on their last quarter there. So other than that, though, they were kind of running up. They were getting in on all of the chip and AI and EV hype. They held up pretty decent, but they had a bad earnings. They got clobbered there completely. They've worked their way up and then even just moved around. I mean, the range is absolutely unreal. So this thing could move, but like I said, it's not really a chip play. That's why I don't really like it, but it has semiconductor in the name. Go look at any other semiconductor. They're absolutely killing it, and these guys are kind of dancing around. So as far as the play and what I decided to do, I spent about $150. I actually didn't think I was going to get filled, and then I did, but I grabbed $150 of the February $1,600 call. So this is before their earnings, and it covers after their earnings. I'm definitely going early. This play was driven more by the AI hype and those earnings moves that we saw last week. So it's not really my favorite play. We'll see how it plays out, but I definitely see a lot of people giving it attention. And like I'm saying, as far as undervalue, this is one where it just hasn't been moving like some other name. So it could get us lucky there. If you could get cheaper plays, even better. I'm just disappointed that I spent $150 because you saw some of the other plays we hit, we didn't really have to spend that much. So that's the only thing I'm really not liking about it. But that is play number 2. And then finally, this one's for the boys, man. I don't know if y'all like this. I'm kind of liking it. Tesla, baby. I took a call. I don't have a put just yet, and I did use the 2 standard deviation strategy, the ghetto standard deviation. That's all you got to YouTube. Ghetto standard deviation, the trading fraternity. You'll find it, but why I liked it is because the calls might be able to move. I got them for $1 within 2 standard deviations. If they do have a surprise, I think right now it's pricing in like 5 to 7, so 10% is not too off there. And if you go look at their last couple of earnings, they've had several 10% moves, 7%, even 11%. So I kind of like it. Earnings are either going to be a dud and Tesla does absolutely nothing, or a 7% move or higher might actually really be in the cards there. And I got to play the play for about like $1.20, I believe. So as far as the play and what I did, I ended up going with a next week. Made sure we got 1 extra week of time. Tesla 240 call, and I spent $1.34. And like I said, I don't have puts yet, and I might go and get the puts. But the thing I haven't been liking about them, even 2 standard deviations, just go look over the last couple of days. Some of these cheaper ones, they have definitely moved up a lot there. So we'll see how it plays coming into it. I may just go solo calls on this one if I can find a good put that is kind of near the standard deviations and doesn't cost too much. I'm down to play it, but I really thought I would go ahead and do this one. But that is play number 3. As far as everything else, we're still in save and a couple of other plays from last week's. We did do a lot of options. I sold out of the TSM. We bought that one for 60 cents, sold out for like 680 or 670, so got a little bit more than 1,000%. That was another 2 standard deviation play, and I will be watching a ton of earnings. Make sure you are there on stream. I plan on going over all the previews, getting analyst estimates, seeing what is priced in and not, and then going to the option chain, and I am going to do all of these calculations live. YouTube.com/the stock market. So hopefully we see you there, but I am waiting for Netflix, and that's one of my favorites, but I don't know if I'm going to play it, boys. It is really expensive. It's pricing in 20%, and you got to spend like $400 to play 20%, but there is going to be a lot of eyes on that. But as far as everything else, we'll see where the data and all of the events take us, how the market feels about all-time highs in earnings. But now, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you will die of a lack of knowledge, baby. Always keep the knowledge alive. Keep learning and don't underestimate. You can understand things and you can get knowledge through some things and how they made you feel. Sometimes you don't get a knowledge till you go through it, till you know the actual feeling, baby. So stay in the game. Keep growing. Keep learning. It's only week number 4, baby. That means we got 48 left to go. Oh, my goodness, Chad. Drink that water. Stay hydrated, healthy, all that good stuff. I will see you in the AM, and peace out, horn.